All right, welcome to tonight's webinar, How to Be a Successful Stock Investor. My name is Tyler Ballhorn, founder of Stockscores.com, and tonight we'll talk about longer term trading. Our last presentation, which was on Tuesday, was about day trading. If you missed that one, it is on the Stockscores YouTube channel, so you can watch it there as many times as you like. Itinerary for this evening, we'll talk about the theory behind the Stockscores approach and what I focus on. How long does it take to look for trading opportunities? I'll give you a little tour of the Stockscores Education Center, and then the final thing that we'll do is look for opportunities. We'll run a couple market scans and see if there are any good trades using the Stockscores market scan tool. So let's talk first about the theory behind the Stockscores approach. The aim is to find market-beating stocks. So when we look at a chart like this, which is a stock that has done fairly well lately, what we're looking for is to stay away from these stocks when they are going sideways and be in them when they are moving quicker than the market. You can see that for 5 or 6 months, the stock basically stayed the same at around $1.10. And then over the course of 2 months, it went from $1.10 to almost $2. And that's when I want to own the stock. And that's what my approach is all about. I've got a methodology that I'll share with you a little bit tonight that looks for stocks making those market-beating returns when they're moving quickly. So the second thing we want to talk about is why stocks move in these strong trends. Well, that happens because there is something fundamentally going on to drive investor optimism. By the way, we're also willing to short sell stocks, in which case we are looking for overwhelming investor pessimism. But let's just step back a little bit and think first about what stock price is based on. When we look at stock price, what we're really looking at is the market's perception of the company's value. And the company's value is based on its ability to make money in the future. What they did yesterday doesn't really matter to the market. What matters is what are the expectations for the future. So an oil and gas company that's producing 1,000 barrels a day of oil will have a certain value based on the cash flow that would come from that production. Now, if they discover a new oil find that increases their daily production by 20%, then you would think that their stock would go up perhaps by 20%, given that their overall cash flow will improve. That kind of news, the fact that they found oil, is what we call alpha related. It is things specific to the company. On the other hand, if the price of oil goes from $50 a barrel to $70 a barrel, then we have what's called a beta factor. It is something important to the company, but not driven by the company. The fact that oil prices go up will improve the company's ability to make money, because instead of getting $50 a barrel for their 1,000 barrels a day, they are now going to get $70 a barrel for their 1,000 barrels. So they've improved their earnings potential by 40% simply because the price of oil went up. And so we always like to differentiate between alpha and beta. Now, in the context of that stock relative to the entire market, we could say that that's a little bit of an alpha factor when the price of oil goes up, because only oil stocks are going to go up. It's not going to be favorable for a mining company or for a technology company if the price of oil goes up. So there's some alpha factor in that it affects only energy and oil stocks. So when we're looking at stocks that are moving abnormally, moving faster than the market, we're really focused on the alpha factor. The beta factor, which is the overall market, will have an effect on what a stock does in terms of its price performance. But for stocks to really beat the market, to move faster than the market, they need the alpha factor. So here we have Tenet Healthcare, which has, over this period for 2018, for example, gone from $16 a share to $36, $35 a share. So it's more than doubled this year. I have no idea why, but it's really directly related to what that company is doing because the market hasn't doubled. The overall stock market has not doubled this year. In fact, it's up probably single digits this year. So we have to always make that differentiation. And if you want to beat the market, you have to focus on alpha. And I'll talk a little bit more about how I find alpha as we go through this presentation. But it's important to understand the difference. And it's important to understand that to beat the market, we want to focus on the alpha component. All right, moving right along. The next point that I want to make is that it's important to understand and recognize that the stock market is not fair. So going back to our oil company example, if that oil company is out there drilling for oil and working to expand their production, what is important to the market is the information about what they might find. So the day that that company announces that they have found a new deposit of oil, that stock should go up in theory. So the stock's producing 1,000 barrels a day. They announce that they have found a new find that is going to improve their production by 200 barrels to 1,200 barrels a day. We would expect on that news the stock to jump to reflect that information. The reality is the stock market will price in that find before it is announced. And the reason why is that there are within every company some people that follow that company very closely, that do great analysis, that maybe have better information. And because of those things, they can predict when that company is going to make a substantial, fundamental change to their business. And with that knowledge, these people will tend to price in the news, the big oil find, before it is made public. And so in this regard, the stock market is not fair. And I've said this many times, it's very important to understand that the spread of information from the company to the public, to the investor, is not fair. There are some people that get information before others, either because they're close to the company, because they're an industry insider, because they're very knowledgeable in the industry, because they do great research, they really do the work to uncover things that the average investor can't uncover. And armed with that better information, they can predict stocks that will move higher quickly. Now, what do you think would happen if you were a large hedge fund? Let's say you manage $5 billion and you're primarily focused in the energy space. So you've been following ABC Oil and Gas. You know that they produce 1,000 barrels a day, and you know that they are drilling on a project in northern Alberta, Canada, in search of a new deposit of oil. Because you have some good geologists on your payroll, you've studied the area where they are drilling, and you know that there's a pretty good chance that they are going to find oil there based on the geology of that area. And maybe you also know that one of the people working on the drill rig was in the bar in northern Alberta, Canada, discussing how great things are looking on that project. And you don't know that because you have some contacts in the industry who also hang out at that same bar. What are you going to do with that information? You don't know with 100% certainty that that company is going to make a big find, but you do your analysis and you say, well, we can buy the stock at $10 a share today, and if they make that find, their stock should go up to $12 or $13 a share. And if they don't make the find, the stock should still stay around $10 a share because the market's not even begun to price in that information. And so you go into the market and you buy the stock aggressively. You buy 50,000 shares on the first day and then another 50,000 shares, and you start accumulating the stock, and then you really get into it and you buy 200,000 shares. And then you see other people buying it on the same day that you're buying it aggressively because maybe the word is starting to get out that that company has good potential to make a find. Well, all of those things create abnormal activity, and that's what I look for. So here we have a day when the stock traded abnormal volume, higher than any day over the previous 5 weeks, and it traded abnormal price action. And those two things combined are something I call an action candle, Stockscores action candle. And I've programmed an algorithm that looks for that, and we have a program that calculates the abnormal activity for every stock that trades in North America. And I'll show you that tool tonight. Well, I know that that stock has a pretty high probability of moving into an upward trend. Now, there's a very important rule that I want to teach you now, and if you can write this down, it's a good idea. Because it's important to know that almost every market-beating trend, and this trend, it was a market-beating trend. The stock went from, $1.60 to $3.20 over the course of less than a month. So that's obviously a very strong market-beating trend. $1.80 to $3.20, so about 80% gain. So almost every, I'm going to say 90% of stocks that make market-beating trends start their market-beating trends with abnormal activity. However, not all abnormal activity leads to market-beating trends. So it's a little bit dangerous for me to tell you, look for abnormal activity, because that's not enough. A lot of abnormal activity does not lead to market-beating trends. There are certain patterns that we look for that help us to find these market-beating trends. And even when we apply those patterns, we should not expect to be right all of the time. There are times when we will do everything right, we will see the abnormal action, we will see the right pattern, and yet the trade still won't work. Here's an example of a stock that I traded right here. There you see the abnormal price, the abnormal volume, our stock scores indicators spike higher, and this stock went higher for 3 or 4 days, and then it rolled over and it broke down through support, giving a sell signal to take the loss. And in fact, I lose on many of my trades. If the trade doesn't work, I get out, because I don't want my small loss to turn into a bigger loss. And so when the market proves me wrong, I get out. Now again, you need to have some methods to know when the market is proving you wrong, when to take the loss. Those are things that I can teach you, but for now, let's just keep the idea in mind that no matter how good our analysis, no matter how much we trust the algorithms and the strategy and the method, we're still going to be wrong some of the time. I was looking at my position trading performance over the last 10 months, and that performance is about 31% gain. So over a 10-month period, a 31% gain, which is a market-beating return. And yet I've actually only been right 44% of the time. So it does not matter if you are right more than you are wrong. What matters is how much you make when you are right versus how much you lose when you are wrong. And in this case, I take the small loss and I move on. In the case of this stock, we have a very nice win, and we're sticking with the trade because the trade is still working. And so that is our final concept that we want to keep in mind, and that is, when we are right, we need to let the trade work. We need to let the stock move in its upward trend, because our winners have to pay for our losers. If you think about it this way, I'm right 44% of the time, which means I'm also wrong 56% of the time. And by the way, this number is abnormally low for me. I'm usually more like 60% right. I don't know what's going on the last year. It's been kind of a wishy-washy market with the correction that we had starting in January. But even only being right 44% of the time, the return is still 31%. I'm going to say over that same period, the market's maybe up, 6 to 8%. I'm guessing, but that's my pretty good guess. Go look at the S&P 500 and see what the return is since August. So my goal is to beat the market. I'm not trying to be right all the time, because people that try to be right all the time actually lose money. Because what happens is they hang on to their losers, hoping that those losers will turn into a winner. And what can happen is that loser, instead of turning into a winner, turns into an even bigger loser. And now their winners can't pay for the losers. So that's a big part of the risk management methodology that I teach. And to do that, we use something called risk-reward lines. So here is a stock that has risk-reward lines on it. Entry point was right there. Stop loss point here. Entry point here. This is our risk. Each one of these lines that is drawn above it is the reward lines. So this is 1, 2, 3, 4, 5, 6. So right now we are between 5 and 6 times the risk, which means if we risked $1,000, we are currently up on this trade about $5,200 in profit. That has a risk-reward ratio of 5.2 to 1. That means that this winner pays for 5 losers. And that's how we make money, even if we are only right 44% of the time. Because we have bigger winners and relatively small losers. And that is risk management. I started trading when I was 19 years old. It took me 8 years to figure that out. I held on to my losers, hoping that they would turn around. I was a very good stock picker, but I really didn't start making good money until I realized the importance of risk management. So my approach to the market is to focus on Stockscores action candles, combine that with predictive chart patterns, use good risk management, have patience with my winners, have no patience with my losers, and I don't try to get in at the low or out at the high. I try to trade stocks when they are moving quicker than the market, when they are trading alpha, and capture the majority of the move, but I don't ever expect to get out at the high, and I don't expect to buy it at the very low. I'd like to buy stocks when they've had a strong day, and I like to sell stocks when they break down and have a weak day. So using this example, again, we looked at this chart earlier. There was my action candle. Here was my predictive chart pattern. And this trade went up fairly substantially. Probably a pretty good sell signal there. Upward trend line was broken. So what is that? $1.15 to $1.80 in 7 weeks. That's a market-beating return. Why did this stock make a market-beating return? Because it's trading on alpha. There's something specific in this company that drove it higher. Now, certainly the price of oil went up at that time, so that's a big part of it. But this stock actually outperformed many oil stocks. So there's something within that company. It's probably leverage. They probably have a leverage balance sheet, so they really do well when the oil price climbs. I don't know anything about this company. I don't try to know anything about companies. What I trust is that the people that know the most are the people that are buying there, and I just follow them. And I use algorithms and computers to track what they are doing. What I look for is abnormal activity. Now, how long does it take to apply my method? We have some choices. Some of my students want to do the work on a daily basis, and so these are the strategies that they focus on. The action break strategy, the Stockscores Simple, the bottom fishing, and the abnormal break strategy. I'll show you how those work in a moment. And they take about 15 minutes a day. Now, when you first learn, let's say for the first month or two, and you're just practicing, it might take you 30 minutes a day. I can do it in 5 or 10 minutes a day. It's not time consuming because I've built some tools that allow me to search through the market and pull out the stocks that are behaving abnormally in just seconds. And I'll show you those tools at the end of the presentation. Now, if you are a more conservative, longer-term trader, you don't want to be so, call it aggressive or more active as a trader, then do this on a weekly basis. You can find 10 to 15 stocks a year, maybe even 20 a year, just running my market scans on Stockscores on a weekly basis, being more patient, turning over your capital less often, but probably more appropriate for someone that's closer to retirement, who doesn't have an interest in sitting in front of their computer on a daily basis for 15 minutes a day. Saturday morning, you do your work, takes 15 minutes, and you can pull out market-beating stocks based on the analysis that you do on a weekly chart instead of a daily chart. Now, what do you need to succeed with my method? You need to know what to look for, and that is the Stockscores Education Center. I will show you that in a moment, but it is an online resource where you can learn my approach. There's about 15 hours of videos and written lessons to go through to learn it. Some people do that in a weekend. Some people take a month to get through everything. I've had some people really zoom through it in a day. You actually don't have to spend all 15 hours because you don't have to watch every video, but some people do. I would say at a minimum, you're looking at probably 8 hours to get through the material. It's an online course, and it will teach you all of the background so that you can do what I've sort of teased you with tonight in terms of knowing what to look for, managing risk effectively, that sort of thing. You also need a tool to find it. So that's the market scan tool on Stockscores, and I will show you that at the end of the presentation. Through the learning process, you're going to have questions. Most people are not fussy enough when they start. And I've taught lots of people, and I find that that's the common thread, is that they're not quite fussy enough. So I really think that support from me is important, and I give that to all of my students so that when you do a market scan and you find ABC oil and gas showing the right pattern, showing the action candle, but you want to make sure, fire me an email and I'll give you some feedback on that to make sure that you are following the rules properly. The final thing is you need capital, discipline, and work, and that is up to you. Of course, you can't invest in the stock market without capital, whether it's your retirement savings, whether it's a cash account that you have, you're going to need capital to work with. You need discipline. If you don't do the work, if you don't take the time on a daily or weekly basis to look for opportunity, to manage your portfolio, to watch the stocks that you own for exit signals, to follow the rules, I can teach you the importance of all of those things, but if you don't do it, you're not going to be successful. And it takes work. It takes work to learn this. You have to put in the 8 or 15 hours to go through the material. You have to practice. For some people, that practice might be months of practice before they're comfortable in their ability. I've had other students practice over a couple of weeks and really get it quickly and are ready to go. And I have a process that you should go through before you start risking your capital. Because as I say in all my presentations, your number one goal is to preserve your capital. And so you need to take the time to learn, to ask me questions, and practice before you risk your capital. And I've got a simulator that you can use to practice without risking any money, just to, get your feet wet with my approach. And I'm always there to answer your questions as you have them. So what is the Stockscores Education Center all about? It is, as I said, it is an online resource where we have different modules. So the modules cover a lot of different topics. I'll show you this in a moment. There's a written component, a video that you can watch, anywhere from 15 minutes to maybe 40 minutes for the written component. There is an assignment for the theory, and there is a test to make sure you understand the theory. We then have the specific rules for when to buy, when to sell, or when to short, when to cover, how to manage risk, the process you go through to identify the opportunities. That's all covered in the strategy lessons, which are broken up into investor lessons and strategies or active trader. So tonight's focus is on investor. That's for people that don't want to necessarily day trade or swing trade. And then, of course, if you want to be a day trader or swing trader, you can apply my strategies for that. The theory is the same. So the foundation is the theory. It's just the rules for when to enter and when to exit that are covered in the different lessons. So if we jump back to Stockscores, and I have to log in here, so I'll do that. Go to the Trader Training area, go down to Education Center, click on that. Here you can see the foundation lessons. They're all listed there. There is a written component, so I can read about the 6 elements of chart patterns. I can watch a video. Click on this, it's going to start a video. I won't hear some funky music. And this video is the 6 elements of chart patterns. And then, as I said, there is an assignment where you have some questions to go through to make sure you understand the concepts. And then there is a test. So that's all online. You work through it at your own pace. If you register for the course, you do that online, and you're instantly given access once the subscription, or once you've signed up online. I'll show you how to sign up later. And you can start the process of going through the lessons. There are these free ones, but the important stuff is the foundation, which teaches you theory, and then you go into the investor area where you learn my actual strategies. Now, once you've done that, you also have access to the Market Scan tool, where you can apply what you've learned in the Education Center. So if I was going to apply the action candle breaks strategy, maybe I only want to run it on the, New York Stock Exchange today, and I can then run the Market Scan. It went through every stock that's listed on the New York Stock Exchange, and it found 14 that meet the criteria. Now we're going to come back to this process at the end of the presentation. We'll actually do some market scans so you can see how it all works. Now the investor course gives you access to the foundation lessons in the Stockscores Education Center. It gives you access to the investor strategies. It gives you access to the market scans for the investor strategy. It provides you with email support from me, and it gives you 6 months access to the tool, which is the market scan, and there's some other tools that we have, which you can then renew at $300 per year to maintain your access to the tool. So you have the knowledge on Stockscores in the Education Center, and you have the tool to search for stocks. Huge time saver, allows you to focus in on the stocks that are behaving abnormally. It takes just seconds for the tool to bring up the list every day. And you can do it during the day. The tool starts updating about half an hour after the open. You can do it in the evenings, you can do it on the weekend. What you choose to do depends on the strategy you are applying. Now, in addition to all that online stuff, coming up on June 9th, I am going to do a special overview class for anyone that has registered for the course prior to June 7th, anytime from basically November of last year until June 7th of this year, will receive the online training as part of their fee. So it's free. You know, if you bought the class 2 months ago, you're going to get this now. If you buy it tomorrow, you're going to get to participate in this class at no charge. I'm going to walk you through the important concepts. I find it's very helpful for people to have me do this 2-hour overview because it gives them a good broad understanding of how everything fits together. And let's face it, it breaks the procrastination. You have to sit and watch my class, or at least if you can't do it on Saturday, June 9th, I do record this as a video. So maybe on Sunday you watch the 2-hour video. I think it's better to join me on Saturday because then you can ask me questions and I can answer them as they come up. But if you're unable to on Saturday, then you can watch the video later. In addition, for those who take the investor course, you will receive 3 practice sessions for market scanning. We will do market scans for about an hour, Monday, Tuesday, Wednesday, practice doing what we talked about on Saturday and what you've covered in the Stockscores Education Center as much as you've been able to get through anyway. So we'll just practice looking at charts and I will show you how to be fussy. I find that if I look at 20 charts, I might like 1 or 2. My rookie student might like 4 or 5. And so I need to teach you how to be fussy, and that's what we will do in those practice sessions. Now, we do have an active trader course as well. I'm not touching on that too much tonight because we did that on Tuesday in that webinar. But for those who want to take the Active Trader course, you get 1 month of Active Trader Live for free if you register for the course before June 7th. In that Active Trader Live, you're basically watching my trading screen. All of the trade signals that I use to make my trades is what you're seeing as well. You're seeing it at the same time as I am. And, basically having my system show you the trades as they happen. So I'll tell you a little story about today. My wife is out of town and I'm having to take my youngest son to school every morning. Normally she does that, but she's in Vancouver with one of my kids, my daughter, who is a competitive horse jumper. They've been at the show. So anyway, my wife is away. I'm taking my son to school this morning, and I had to basically only trade before I could take him to school. So I traded for about an hour today. I left about an hour, well, a little more than an hour. Anyway, so I did, I don't know, I think 10 trades today. I made more in that 1 hour than my course costs. So the Active Trader Live course costs, I'll show you this in a minute, $3,495. I made more than that in an hour this morning using my strategies. So the special offer is to get that overview class, the market scanning if you take the investor or Active Trader course. If you take the Active Trader course, you also get 1 month of Active Trader Live included. If you register for the course before Thursday of, I guess 1 week from now, Thursday of next week, 11 p.m. Pacific time, you will get the overview class, the strategy application series for free. Cost of the course, the investor course, $2,495. This is Canadian dollars. I know we have some people in the webinar tonight from outside of Canada. And you get the Active Trader course for $3,495. Now, I have a lot of you in here who maybe took the investor course 2 years ago and want to upgrade to the Active Trader course. You can do that. The cost is $1,250 to upgrade. And so if you want to do that, it's not that easy to figure out how, so I'm going to show you. If you would like to upgrade from investor to Active Trader, or maybe you took the foundation class 5 years ago and want to upgrade to the course, what you do is you go into the Education Center, and it will show you the link here. It'll show you the cost to upgrade. And then if you click on that, there will actually be a link right here. Now, it doesn't show it for me because I don't need to upgrade. I own all courses, obviously. But if you have never taken the Active Trader course, but you did take the investor course, when you click on the Active Trader bundle, there will be a link right here for you to upgrade. And it's real easy to do that. Now, in addition, for my past students, let's say you took my course 2 years ago and you want to do that Saturday class again, not the market scanning class, but the actual Saturday overview class, you can sign up for that. Go into the upcoming events and go down here to Stockscores Trader Training Overview Session. As long as your subscription is current, as long as you are an active member of Stockscores, you can join in on Saturday for $5. And that $5 is being donated to charity, to the food bank in the city where I live. So if you've already taken the course in the past, you just want a little refresher, go ahead, sign up for that. It's $5. And it doesn't go to me, it goes to charity. You do have to have an active subscription. If you don't have an active subscription and you need to renew, go to the My Account area. And on this page, you will see, go to the Membership tab, you will see a link to renew. So you go to My Stockscores Membership, and there will be a renewal link here to renew your subscription. Now, my subscription is live. It says that I'm good until 2020. But if you wanted to renew, you could do so for $300 a year. Or if you prefer to do it at $49 a month, you can do that. Obviously, it makes more sense to do it for $300 a year. Once you've renewed, you will be eligible to do the Saturday class for $5. Okay, let's get back to the presentation. I'm going to quickly post a poll. If you would like to receive an email from me later on this week, or I don't know, in the next couple days, I will send out an email with just a little more information on the upcoming class and how to register. You just need to answer this poll with a yes. I know some of you already answered this poll with a yes. I will be sending out the email, like I said, in the next day or two. But answer this again, or answer it for the first time if you would like the follow-up email, and I will send that out to you. Now, the next thing that we're going to do is a couple market scans together. We will see if we can find some opportunities, and then we will wrap it up, and I'll try to answer any questions that have come in. So I'll leave this up for another 15 seconds, and then we will do some market scans. So I'm just going into the market scan tool now. You don't see that yet. I'll close the poll and then you will see that. But I'll leave this up for another 10 seconds, so get your vote in quick. Now, in that poll, there is something in there about the mentorship. So let me just explain what the mentorship is. Once a year, I do a 4-month weekly meeting for about an hour once a week, where I really sort of do some hand-holding through the learning process. It's mostly focused on the active trader course, because I think that's where people need some extra hand-holding with using software and stuff like that. I'm not doing that until maybe the fall, so it's not available right now. I just find people aren't really interested in, doing a weekly 1-hour meeting in the summer. They'd rather be on the beach or golfing or whatever you do. So I won't start that up until the fall. But if you do the course now, you can upgrade to the mentorship for the price difference if I offer it, say, in November, which I think is when I did it last year. So that's an option for you. You can study the material now, learn it, practice it. You'll be much more prepared for the mentorship when I run it in the fall. And you'll just pay the price difference. There's no penalty for having to wait until the fall. In fact, in many ways, I think it's better, because you'll have a few months to practice and learn before you really can sign up for the mentorship anyway. All right, I'm going to take down the poll. Thank you for answering. And let's do some market scans. So you should see my market scan screen come up. There it is. So what we're going to do is run, let's do the abnormal break scan. So we're going to run this on Canada first. I looked at this earlier. There wasn't a lot of candidates. Yeah, it's still the same way. Only 2 today. Market was down today. So now what I need to do is look at these charts to see if I like the pattern. And I don't like the pattern on any of these. These stocks are well into their upward trends. Now, if I wanted to, I can make this a little longer term chart, and I can see. So let's say you were doing this process on a weekly basis, in which case you're going to look at the weekly chart. We had an abnormal price break with abnormal volume on Canada Goose Holdings, which makes winter jackets, right there at the start of November of last year at, I don't know, $33 a share. It's now at $55 a share. So if you were running this process on a weekly basis, you would have found that stock back then. In fact, I think I wrote about it in my newsletter back then. And you're now had a pretty decent gain, 65% or so, as that stock has gone from 33 to 55. 15 minutes a week would find you that one. Would I buy it today? No, would not buy it today, but I would hold it if you still own that. But no reason to buy it here. It's just a little too late. Now on BRP, which is a company that makes Ski-Doo and Sea-Doos, they had a good entry signal, again, on the weekly chart. I would say the ideal one was last summer. Again, $36-ish, $37 a share, currently $60. It takes 15 minutes a week to find these. Unfortunately, I just don't see anything tonight that I would consider buying. So let's go take a look at the US market. We're going to run the abnormal breaks US and run the scan. Now, I just went through every stock that traded in the United States. There's, I think, 7,000 stocks listed in the US, and it found 38 that meet the criteria of that strategy. And it did it in less than a second. Huge time saver. When I started trading this method back almost 30 years ago, well, no, I didn't start doing this method until maybe 25 years ago. I was doing it manually. I was downloading data and plugging it into spreadsheets, and it would take me hours and hours to do what just took us less than a second. So technology is huge. but you shouldn't underestimate the technology that's behind this. I've spent hundreds of thousands of dollars building the system that does this. And I'm often asked, if you trade and you're successful as a trader, why do you sell courses? Why do you sell subscriptions to the website? Well, I need this tool myself. This tool is super valuable to my own investing, and it costs a lot, over $100,000 a year, just to keep this tool running. I have to pay data feeds from the exchanges. I have to have hosting. I have programmers that work on this stuff. We make upgrades and modifications. It's not a casual tool. And so, if I don't teach people and have memberships to the website is just too expensive to justify for my own investing. So that's one of the reasons why I do this. Anyway, let's get into the results of this scan. Now, last time we did a gallery view, which allows us to look at a bunch of mini charts. This time, let's do slideshow view, which is larger view. We're going to jump to large charts. Makes a little more sense, especially when you're learning to look at large view. And now what I can do is I can just use the arrow keys in my keyboard and cycle through the charts looking for the right pattern. Now, remember earlier I said that almost all market-beating stocks start their market-beating trends with abnormal activity, but not all abnormal activity leads to market-beating trends. So as I cycle through these charts, I'm looking for patterns, and I will teach you in the Stockscores Education Center what those patterns are, but right now I'm just looking at these charts and saying yes or no. So up until now, they've all been no's. This one I would rate a 7 out of 10. I do think it will go higher. I'm not sure that it will go up enough to justify us for the risk. So I'd give it a 6.5, 7 out of 10 as a rating. I think it'll probably get up to $5.50 and then get stuck. And that doesn't quite give me enough reward for the risk I've taken. Now you might be wondering, well, how do you know, Tyler, that it's probably going to go to $5.50, maybe $6? That's just based on having done this a long time, a lot of experience, and that's the experience that you're going to learn when you go through my course material. And it's the experience you can call on if you are one of my students, because if you have a question about a stock and you want to know, does it fit the criteria of a strategy? Are you applying the rules that I'm teaching you properly? You email me and I'll answer you on that. So we'll continue to cycle through these, and I will, that one we're about 1 day late. That one's not good. This is pretty good. This is a pattern called a cup and handle pattern. I'd give this a 7 out of 10. I wish the volume was a little stronger, but I do like it. I'm going to take a look at the longer term chart just to see if there's any longer term resistance. No, actually, I quite like this one. So I'd almost give this a 7.5 out of 10. Borderline 8. I think this stock has got about a 65-70% chance of moving into an upward trend. It's the best chart we've seen so far, ONDK, something to keep an eye on going forward. This one, nope, coming into some resistance, big gap, makes the reward for risk not very good. This one, incidentally, we discussed in my active live webinar. So every day in the last half an hour, we do some scanning, or I do the scanning, and I share with people in my active live webinar if I see any good opportunities. This was one, this is actually the warrants, but we'll come upon the stock in a little bit. I'm sure it'll come up as well. But we picked this one on May 16th, or I picked this one on May 16th. Lots of people agree with me, I guess. And it made a huge jump today. I have no idea why. Here's the actual stock. So there was the entry point on May 16th, and it was up, I don't know what the percentage is, let's say $5. That's up 100% today. And it all started with the signal that we got a couple of weeks ago. Too late now. I wouldn't buy it now, but if you own it, I would still hold on to it. It looks okay. So I'll cycle through these a little quicker here. But this is the process. And when I say it takes 15 minutes a day, what you're seeing is the process that I go through. Run the market scan, know what to look for in the charts. When you're early to this process, you're going to take 10 or 15 seconds per chart, slower for you when you're new. But when you've done this for a while and you've practiced, you literally look at these charts for 1 second. I can go through them super fast because I've done this for 30 years. If you've done it for 1 year, it's going to take you longer. This is a stock I picked yesterday. All right, so yesterday Again, in that active live service, I said this was my top pick. I rated it an 8 out of 10 yesterday, and today it's up, I don't know, I think about 14 or 15% today. That's 1 day's return. A lot of people buy a mutual fund, it doesn't return 14 or 15% in a year. So we're almost done. We're at number 30 of 38. And I found one good one pretty good one, and then a couple of recent examples of what I found in the past week or two. This one's pretty good. I wouldn't say it's outstanding. I'd give this probably a 6 out of 10. Risk reward is not ideal on that one. A couple more to go here. And that's our last one. I actually day traded this stock today. I'll just show you. So for those of you that were in Tuesday's webinar, I talked about action candles on a 2-minute chart. I bought this stock right at the open, and it had a big day, obviously. Although it's a $185 stock, it still managed to move like 40 or 50% today from the entry price. I mean, it's up more than double from yesterday's close. So all of this goes back to what I've talked about tonight, which is that focus on abnormal activity, focus on alpha, using a simple set of rules, a simple process to identify trades early in their trend. Now, if you want to learn how to do this, what you can do is register for the course. And to do that, go to stockscores.com/learn before June 7th. If you want to go to the Stockscores website, just go to Trader Training, Learn How to Trade, click on that. And on this page, there's a couple of videos. There's a video for each course, one for the investor course, one for the active trader course. And you can sign up right there. Just click on Order Active Trader, and it will allow you to sign up. If you don't want active trader, if you want investor, click on Order Investor course. If you take the active trader course, you get the investor course. If you only want to do the investor now and later on you want to upgrade, which a lot of my students do, by the way, you just pay the difference plus $250 for the upgrade. If you have questions for me, there is my email address, tylerb@stockscores.com. Follow me on Twitter if you want to see some of my recent trades or I put out little trading anecdotes. Just go to Twitter, look up Stockscores on Twitter. You can scroll through some of my tweets recently. I have lots of videos on YouTube, free to watch. Go to youtube.com/stockscores.com or just do a search on YouTube for Stockscores. And when you're at my YouTube channel, make sure you subscribe. You'll get the alerts when I upload a new video. I do at least one new video a week where I analyze the market and give you some trading tips. So more free information, great ways to stay engaged with what we're doing here at Stockscores. So I'll try to answer some questions now, and then we'll end for this evening. If I miss your question, because I have to look on this tiny little thing here to try and figure out what the questions are. So if I miss a question, please email it to me. How do you determine the width of the reward for risk lines? That's covered in the course material. It's pretty simple, but there's a little formula that I teach you for that. Once I've signed into the GoToWebinar application and listen, I can only hear you speaking. The display screen is blank. So Ken, I don't know why that's happening. That's, I think, specific to you. I don't have anyone else complaining of that. So that's something I can't explain. The best thing to do, Ken, is email me, and we'll probably have to send you to tech support for the GoToWebinar company to figure out why that's happening. I don't have anyone else telling me that that's a problem, so it's interesting. Well, it's not a good interesting, it's a bad interesting, but we'll have to figure out why. Hopefully you can watch the video and it'll work for you that way. Do you take the note of the signal and sentiment ratings as well? Yeah, the signal and sentiment stock scores, I didn't talk about that tonight, but they are components of some of my strategies. So there's a strategy called the Stockscores Simple and another one called the Stockscores Simple Weekly, where we use those stock scores. Other strategies, for example, the action break strategy, we don't use the stock scores. It's just another indicator that we can use for some subscriptions. If you were a past subscriber and your subscription previously expired, what would the cost of the course be? If your subscription expired, you still have access to the course. You don't have access to the tools, but you can subscribe to the tools for $300 a year, but you don't lose your access to the course material just because your subscription to the tools expired. So you should be able to log into Stockscores and look at the education still. Now, if you want to upgrade to Active Trader, for example, you can do that. But I encourage you to go into the website and go into the Stockscores Education Center, and you will see what you have access to. Don't go to the Learn to Trade, because the Learn to Trade page isn't programmed to remember whether you are a subscriber already. So you have to go look in the Education Center to see what your status is. And also the My Stockscores page, which will show you the the subscription process to renew your subscription. So I don't see any more questions there. If you would like to ask me other questions, again, my email address, I will just bring up that screen again. There it is, tylerb@stockscores.com. I encourage you to email me if you have any questions. I will be sending out a email with the video link for tonight's video, probably tonight, maybe tomorrow, probably more likely tomorrow actually, possibly tonight, soon. And that way you can watch the video again. And hopefully I will see some of you on Saturday to participate in the course material. And again, you have two options: investor course, active trader course. Investor is focused on the topics we discussed tonight. Active trader is focused on what we did tonight, but also the active trader, day trading and swing trading stuff. And of course, we have the live webinar. Again, if you missed the webinar on Tuesday, there is a video on the Stockscores YouTube channel. Just go check that out there. It's about an hour and 10 minutes long. I think that's all. So I will wrap up tonight's presentation. I want to thank you all for joining me this evening, and hopefully we'll see you again soon. Have a great night and trade well.